very important topic we are going to discuss today. The topic is leverage. Before going to leverage, let us recap what we have discussed in marginal costing, which we have studied in management accounting. So we have a format. There is sales minus variable cost, we will get contribution. Contribution minus fixed cost, we will get profit. Okay. Here what we are doing is, in the leverage, we are trying to see the use of debt funds for effective utilization of the resources in organization. So we can have three different types of leverage. The first type is operating leverage. The second type is financial leverage. The third type is combined leverage. Let us discuss one by one. So operating leverage is nothing but we are going to deal with the business risk. So in order to tackle the business risk, the operating leverage is very important. So how can we calculate operating leverage? We can calculate the degree of the contribution divided by the earnings before interest and tax. So let us come back to this framework. So sales minus variable cost, you will get contribution. Contribution minus fixed cost, you will get EBIT, that is earnings before interest and tax. Then you deduct the interest component, you will get earnings before tax. Then you deduct the tax component, you will get earnings after tax. Okay. After this, you deduct the preference dividend. Here, just recollect what is preference dividend. Normally, the shareholders who are having the preference shares, they will be given the first preference of getting the dividend. So, the shareholders who are belong to the class of preference shares, they will get the preference dividend. If any such provisions are there for the company, it can be deducted from the earnings after tax. You will get EATS, that is earnings available for the equity shareholders. After distributing the dividend to the preference share class holders, anything that is left out, then we will take a decision whether to share the dividend to the equity shareholders or not. It is not compulsory that we have to give dividend to the equity shareholders. Okay. Then you see the number of shares. So the earnings available for the equity shareholders divided by the number of shares, you will get EPS. What is EPS? Yes, EPS is nothing but earnings per share. Okay. So students, I am sure you are very much clear in this framework for calculating this leverage part. Now I come back to this types. So this operating leverage is basically focused on business risk. Okay. And this financial leverage basically focused on financial risk. So combined leverage is nothing but you are trying to combine both operating leverage and financial leverage. So combined leverage is nothing but you are just combining operating leverage and financial leverage. So it is otherwise called as total leverage. So you are trying to measure the total risk. Okay. So first part, you have to measure the degree of business risk. We are focusing on the operating leverage. How to calculate operating leverage? It is nothing but contribution divided by EBIT. Next, financial leverage. We are trying to focus on measuring the financial risk. So how will you measure the financial risk? We are trying to focus on earnings before tax divided by earnings before interest and tax. So basically we are taking these two calculations for measuring the financial risk. Then how will you measure your total risk or total leverage? It is nothing but the product of operating leverage and financial leverage. Okay. So these are three important aspects. Now before tax means you will take this component contribution by EBIT, even EBT divided by EBIT. If it is going to be after tax means you are taking the position additionally into 1 minus T. Okay. So any problem we try to focus on this particular framework which will give the clarity on the application of leverage. So let me tell you, I want to measure my business risk, I should depend on my operating leverage. I want to measure my financial risk, I have to depend on my financial leverage. So I want to see my total risk, I should depend on my total leverage or combined leverage. Okay. Now there is a concept called indifference point. So this is related with this leverage. Students, you come across break-even point. Okay, you come across the cost volume profit analysis when you are studying in the first semester management accounting. But in financial management, in the leverage part, we have a concept called indifference point. We are trying to see the relationship between EPS and EBIT. So you try to take a graphical mode. In one axis you can take EBIT, that is earnings before interest and tax in x-axis. In the y-axis you take EPS and try to see the points, how it can able to plot the curve similar to break-even point. And from there you can able to manipulate how this impact is going to be created. So the relationship between the EPS and EBIT will give a clarity about the change in the EPS, or it refers to the change in the operating profit. Okay. So we have a separate mode of graphical mode where this common point will be there. We can take this EBIT here and EPS here, the relationship between these two, so that we can talk about the point intersecting from the two different areas. Okay, you can take this as x-axis and this as y-axis. Okay, so normally in the case study they will be trying to tell you how to calculate the operating profit. So operating profit is nothing but your EBIT, the other name for earnings before interest and tax. Some books they used to follow the notation like earnings before tax can be called as profit before tax. Okay. Similarly, earnings after tax can be called as profit after tax. Both contain the same meaning. There is a profit before tax or earnings before tax. Same, both contains the same meaning. So you can able to manipulate the better option. Okay. So there are different phases in calculating the mode of leverage. For example, we have three plans: plan 1, plan 2, and plan 3. Okay. So a company is having three different plans, and where the variable cost, fixed cost, and sales has been given to you. You need to calculate which plan is better for the company, taking into account the degree of risk. So first we have to calculate the business risk. We have to see what is the time, how much times the leverage is going to have. Next we can have the financial risk, how we can able to plan, and finally then we go for the total risk or total leverage in balancing these two. Okay. So in the case study you will get a question how this three different plans will be relating with the three different mode of leverage. Finally we can able to come to a conclusion the impact of the leverage over a period of time. Okay. So applications we can take, as I said, we can say business risk can be calculated using the operating leverage, financial risk can be calculated using the financial leverage, the total risk can be calculated using the combined leverage. So as a result, in the modern world, we have to see how the risk return can be trade off with the help of this leverage application. So this is the fundamental concept. My dear students, you can understand the basics. I am sure you can able to appreciate, internalize the concept which I told now. In the next class, we will talk about the application of problem. Thank you.